What happens when one of the most closely watched technology-focused hedge funds suddenly opens a brand new position in AMD? That is exactly what investors are paying attention to right now. Coatue Management, led by hedge fund manager Philippe Laffont, recently revealed that it purchased nearly 96,000 shares of Advanced Micro Devices, or AMD, during the second quarter of 2026. Based on the value reported around the filing date, the position was worth approximately $55.8 million. At first glance, that might look like just another hedge fund investment. But when you look at the rest of Coatue's portfolio, the AMD purchase becomes much more interesting. The fund wasn't simply buying AMD in isolation. During the same period, Coatue established new positions in several companies connected to artificial intelligence and next-generation computing infrastructure. Those names included Intel, Cerebras Systems, Hut 8, and SpaceX, among others. That broader strategy could be an important clue. Instead of trying to predict exactly which single company will dominate artificial intelligence, Coatue appears to be positioning itself across different parts of the AI ecosystem. That includes semiconductor manufacturers, data center infrastructure, cloud platforms, networking, and companies involved in the enormous computing demand created by AI. And AMD is becoming an increasingly important part of that story. Coatue's portfolio already has significant exposure to the semiconductor and infrastructure industry. Taiwan Semiconductor remains one of its largest holdings, representing more than 8% of the portfolio, while Lam Research is another major position. Micron and Applied Materials also rank among its significant technology investments. The fund also increased its exposure to major technology companies, including Amazon, Microsoft, Alphabet, and Broadcom. Put all of this together, and the message becomes clearer. Coatue appears to be building a diversified portfolio around the long-term expansion of artificial intelligence, rather than relying on a single AI winner. And that makes the new AMD position particularly interesting. AMD's latest financial performance gives investors a reason to understand why a major hedge fund might want exposure to the company. During the second quarter of 2026, AMD generated approximately $11.5 billion in revenue. That's a 50% increase compared with the same period a year earlier. But the most important part of AMD's business may be what's happening inside its data center segment. Data center revenue more than doubled year over year, and the segment now represents roughly 58% of AMD's overall sales. That is a major transformation for a company that has historically been known primarily for its consumer and gaming processors. AMD is increasingly becoming a critical player in the infrastructure supporting cloud computing and artificial intelligence. Server CPU sales were also extremely strong during the quarter, increasing about 70% across cloud and enterprise customers. And AMD management isn't expecting this momentum to disappear anytime soon. CEO Lisa Su has indicated that server revenue could increase by more than 80% year over year during the second half of 2026. While full-year 2027 growth could remain above 70%. If those expectations are achieved, AMD's position in the data center market could become even more important. But CPUs are only one part of the opportunity. AMD is also aggressively expanding its AI accelerator business through its Instinct family of GPUs. The company's data center AI business more than doubled during the quarter, highlighting the growing demand for alternatives to Nvidia's dominant AI hardware ecosystem. AMD is now going even further with its Helios rack-scale AI platform. Helios combines AMD's EPYC Venice CPUs, MI450 series GPUs, networking technology, and the company's ROCm software platform into a broader AI computing system. That is important because the AI market is evolving. The competition is no longer simply about who can manufacture the fastest individual GPU. Large AI customers increasingly want complete systems capable of handling massive workloads efficiently. They need processors, accelerators, networking, software, memory, and infrastructure to work together. AMD is positioning itself to compete at that broader level, and one of the most interesting developments is AMD's relationship with Anthropic. During the quarter, AMD announced a strategic partnership with Anthropic involving its MI450 series GPUs and Helios platform. Anthropic plans to deploy as much as 2 gigawatts of AMD GPU capacity, with the first gigawatt expected to begin rolling out during the first half of 2027. If that deployment proceeds as planned, it could represent a significant validation of AMD's AI technology. But there is another major development that investors shouldn't overlook. The AI industry may be entering a new phase. According to AMD's Vice President of Financial Strategy and Investor Relations, Matt Ramsey, spending is gradually shifting from training massive AI models toward inference. In simple terms, training is where AI models learn. Inference is what happens when those models are actually used to answer questions, make decisions, analyze information, or perform tasks. And the next stage could be even more important. That is agentic AI. Instead of simply responding to a single prompt, AI agents can potentially complete multiple steps independently, interact with software, make decisions, and perform more complex tasks. These workloads could require substantial computing resources. AMD believes this trend could be favorable for its products because agentic AI applications can require powerful CPUs with large numbers of processing threads, combined with high-performance GPUs. AMD has projected that the server CPU market could reach approximately $220 billion by 2030. Even more interestingly, the company believes agentic AI workloads could represent around two-thirds of that demand. If that forecast proves accurate, the AI opportunity could extend far beyond today's chatbot boom. It could become a much larger infrastructure cycle involving businesses, cloud providers, autonomous systems, enterprise software, and countless other applications. AMD's progress with its ROCm software platform is another piece of this puzzle. For years, one of Nvidia's biggest advantages has been CUDA, its mature software ecosystem that makes it easier for developers to build and run AI workloads on Nvidia hardware. AMD has been working aggressively to close that software gap. Ramsey highlighted an especially interesting example involving Anthropic. Earlier this year, Anthropic engineers reportedly managed to get AMD Instinct accelerators running a leading inference model in just one weekend, without direct assistance from AMD. That doesn't mean AMD has completely eliminated Nvidia's software advantage, but it does suggest the gap may be narrowing. And if AMD can continue improving its software ecosystem while delivering competitive hardware, the company could have a much stronger position in the next phase of AI infrastructure spending. Wall Street also appears optimistic about AMD's longer-term potential. Among the analysts covering the stock, the majority currently carry bullish ratings. 36 analysts have a strong buy rating. 2 have a moderate buy rating, while 7 analysts rate the stock as a whole. The average price target is around $621.73. Which represents roughly 32% potential upside from the referenced current level. Of course, investors should remember that analyst targets are not guarantees. AMD still faces significant competition, particularly from Nvidia and other semiconductor companies. The AI industry is also moving incredibly quickly, and expectations are already extremely high. A company can deliver strong growth and still see its stock fall if investors believe that future growth isn't strong enough to justify the valuation. That's why Coatue's investment should not be interpreted as a signal that AMD stock is guaranteed to rise. Instead, it may be better understood as another indication of where sophisticated investors believe long-term AI spending could create opportunities. And this is where Coatue's broader strategy becomes especially interesting. The firm didn't only buy AMD, it also added exposure to Intel, Cerebras, SpaceX, Hut 8, and other companies connected in different ways to the expanding technology and AI infrastructure ecosystem. At the same time, Coatue already holds major positions in semiconductor and technology companies. That suggests a strategy based on owning multiple potential winners, rather than betting everything on one company. If AI infrastructure spending continues expanding, different parts of the ecosystem could benefit at different stages. Chip designers can benefit from increased demand for processors. Foundries can benefit from increased chip production. Memory manufacturers can benefit from larger AI models. Data center companies can benefit from rising computing demand. Networking companies can benefit from increasingly complex AI clusters. Cloud providers can benefit from rising AI usage. And companies developing AI applications can benefit as the technology becomes more capable. AMD sits in the middle of several of these trends. That's likely one reason the Coatue position is attracting attention. For everyday investors, the key takeaway isn't necessarily that they should immediately buy AMD because a hedge fund did. The bigger takeaway is that major institutional investors continue to view AI infrastructure as a potentially enormous long-term opportunity. Coatue's new AMD position adds another piece to that picture. AMD is growing rapidly in data centers, expanding its GPU business, developing complete AI systems through Helios, strengthening its ROCm software ecosystem, and building relationships with major AI companies such as Anthropic. At the same time, the industry itself is moving toward inference and potentially agentic AI, which could create a new wave of demand for computing infrastructure. So the real question for AMD investors isn't simply whether AI is growing. It clearly is. The bigger question is whether AMD can capture a meaningful share of that growth while competing against some of the most powerful companies in the semiconductor industry. Coatue Management appears to believe AMD deserves a place in that race. And with nearly $56 million worth of AMD shares added to its portfolio, this isn't a move investors are likely to ignore. Still, before making any investment decision, remember that hedge fund filings reflect past positions, not necessarily what those funds are buying or selling today. Market conditions can change quickly, and no institutional investment guarantees future performance. This video is for informational and educational purposes only and should not be considered financial advice. Always do your own research and consider your own risk tolerance before investing. If you found this breakdown useful, make sure to like the video, subscribe to the channel, and turn on notifications for more updates on AMD, AI stocks, semiconductors, and the broader technology market.